Hey all, welcome to ShareTrekc. This is Raj here, friends. I thought I'll make a very brief video on Editas. Editas jumped a lot on Friday, so we need to have a look at what's happening out there. And yeah, I'm going to keep it very brief, so let's get started. Welcome back, friends. Editas jumped 18.21% on Friday and has climbed to almost 32% since 30th of October 2023. That's a very rapid climb. And one of the reasons why all our genomic stocks are climbing, not just Editas, is because of increased risk appetite. As the job numbers came in benign and also the Fed became dovish looking at inflation stats and employment, the bond yield started falling. This means that the market is expecting inflation to go down and the interest rates to go down. And so I think we are in a period where bad news is good news. Bad news for the economy is good news for the stock market, and this will go on until we actually get rate cuts or recession. People are saying recession won't happen, but if recession did happen, then that will also be another turning point. That is when the market will be realigned with the economy, so that economic bad news means market bad news. So we have to carefully watch for that turning point if we want to protect any of the profits that we make as the run-up continues right now. On its part, gain in Editas is also because Editas narrowed its loss to $45 million or $55 cents a share for the third quarter from $55.7 million or 81 cents a share a year earlier. The street expected a loss of 59 cents a share, and Editas came 4 cents better than expectation. This shows improved productivity and efficiency, and this is well below the 81 cents per share loss from the same period last year. So it's the major cause of bullishness for Editas. Collaboration and other research and development revenues surged to $5.3 million from $42,000, and the street had expected $3.7 million. A part of this is the collaboration income consisting of upfront payment for the non-exclusive Cas9 license to WarBio. This happened in the third quarter. And Editas disclosed that its cash equivalents and marketable securities declined to $446.4 million compared to $480 million as of June 30. The cash runway, Editas says, will take Editas into the third quarter of 2025. So there is still money left. General and administrative expenses diminished significantly by $1.2 million to $15 million for the 3 months ended 30th September 2023, as compared to $16.2 million for the same period in 2022. The decrease was driven by reduced headcount, related expenses, including stock compensation, and reduced legal costs. At this point in time, the stock is still down 4.9% from the previous year, but is recovering fast. And here is a brief readout on its therapies, because we have to look at the pipeline progress. Edit 301 clinical data update is that the company will share clinical data from the Ruby trial for severe sickle cell disease and Edithal trial for transfusion-dependent thalassemia in a company-sponsored webinar and in a poster at the American Society of Hematology annual meeting on Monday, December 11th. So we have to watch out for December 11th and see what the data says. It could be a positive catalyst, and that can help further catalyze the share price of Editas. Edit 301 for sickle cell disease continues to enroll and dose patients in the Ruby trial for SCD. In October, the US FDA granted RMAT designation to Edit 301 for SCD, and Edit 301 for TDT continues to enroll and dose patients in the Edithal trial for TDT. And those activities are going on in parallel. We'll see the data progress around December, middle of December. And third quarter 2023 results are looking pretty good in the sense that what was expected by the street was surpassed by Editas. So overall, it's looking good, but we have to be careful, because if there is anything pessimistic that happens, that could push the market down sharply. We have the Middle East war going on, Israel and Hamas, and then we have the Ukrainian conflict going on, and we have some tensions with Taiwan and China. So overall, there is a lot of geopolitical things happening, and within the US itself, political stability is a big question, in my opinion, especially for businesses, because of what's happening with the court cases that are going on, not only with regard to Trump, but also with regard to voters' right and gerrymandering, map drawing, and all those things. So there is a little bit of political instability that could seep in as we go closer to 2024 elections. So we should keep all these things in mind. And I personally feel that whenever there is a gain, and I think that I'm a bit apprehensive, I would like to take the best premium and the best strike price and sell a covered call to safeguard the downside. Yeah, that's my strategy. I'm continuing to hold Bluebird, CRISPR Therapeutics, DNA, and I also got ARC-G. So these are the things I have in genomics, but my bigger holdings are in FANG stocks and the likes of Amazon. Unfortunately, I sold off Berkshire to book profit almost 2 weeks ago, and since then I've not been able to enter into Berkshire. I sold off FNGU for a big profit almost a couple of months ago, and I have been able to re-enter it by buying 50 shares at 129. That is quite profitable right now, and I've got more money left, which will go more into FNGU whenever I get the opportunity. So yeah, that's what I have been doing, and I've also placed covered call orders for both Bluebird and CRISPR Therapeutics. So yeah, so that's my disclosure from my side. I think everything is looking good right now, thanks to the employment stats and the inflation rates that are going on. So if we don't have a supply chain bottleneck due to war or something, and if the oil price doesn't go up too much, I think we'll be fine, and this party can continue into the Santa Claus rally. But if something bad happens in between, just beware. That's what I would say. With that said, my friends, I'd like to bring this video to an end. I'll catch up with you soon in the next video. Bye for now.